I hope we are live. If you can hear me or if you can see me, please do comment and let us know in the chat. Good evening. Welcome to Ekcel Academy's CSEET live classes. This is Vishwas Krishna here. I'll be the host for today's live session. As you may have already watched a couple of videos made by my colleague CS Swati Sharma, the institute has revamped the CSEET course to an extent. The syllabus is changed now, and also the mode of examination in the three subjects, and one of those is fundamentals of accounting. So this is something which is not new to the institute. If you have been following the institute for some time, you will know that fundamentals of accounting was initially part of the CSEET course, but then when the institute revamped it some 4-5 years ago, they removed it, and then now it's back again. So this is something which happens on and off. So here we are again with accounts, and this time for full 100 marks, and this time the mode of examination is subjective or descriptive, because that's what the institute has decided. So that's how we will be preparing for the subject 2. So let me just have a look at the browser and check if the video is appearing. Okay, seems to be fine. I just wanted to confirm. Okay, done. I hope the audio is also fine. If there is any issue in the audio, please do let me know, because I have muted myself here. So video seems to be fine. If the audio is okay, then we are good to go. So before we proceed any further diving into the subject, let us clear a few things. So this is a free program, or free live streaming by Ekcel Academy for the entire CSEET course. That is a new syllabus. Everything will be available here, and every day you will have classes more or less. And if at all, if you think that you need more than this video lessons, and if you think that you want like hand-holding of sessions, and then I would suggest you to enroll for our CSEET mentorship program. So you can see the image on the screen. This will be a one-to-one personal mentorship. You will of course have writing practice, and there will be weekly tests, and not just tests, you will get corrected papers as well, because if you look at accounts now, fundamentals of accounting, it's a descriptive paper. So more often than not, you wouldn't be well versed with all these practices coming from 10th, 11th. So it would be better if you take up these mentorship programs, because then you will get an idea as to where you stand. Otherwise, you may not understand how exactly your studies is moving ahead. Of course, there will be weekly tests, and there will be mock exam, and the group mentorship sessions by CS Swati Sharma, my colleague. So I would suggest you to please contact our number, which is on the screen, 973-973-3400, and enroll for the program. And June 2026 is when you will be writing CSEET exam under this new scheme. So that is about it, and of course the details will be there in the description. You can check it out later as well. So now, where were we? Coming back to the syllabus, let us have a look at the syllabus. Let me just bring it up. Okay, this is in fact the syllabus of the fundamentals of accounting paper 2. That is, this is for entire 100 marks, as you can see on the screen. Let us quickly go through what is there in the syllabus, and then we'll get into the lessons. Of course, once the streaming is over, you will find these videos here on the Ekcel Academy's YouTube channel as well. Now let us see what is there in the account syllabus. So the level of knowledge is of course basic knowledge. Nothing much is expected. You are supposed to understand the basics, and that is where most students falter. So that is why you have to be very careful, because even in executive level you have accounts, and if you are well versed with this, then you shouldn't find it difficult to pass. Not just pass, you will be able to score more as well. Let us see. Basic concepts and principles of accounting, meaning and scope of accounting, accounting concepts, accounting principles, policies, etc., etc. All these things completely theoretical in nature. That is the first chapter. There is nothing practical happening there, because first we have to understand what is accounting. What are the core concepts of accounting? What are the accounting principles which we are expected to understand even before we proceed into the practical aspect of that? Then accounting as a measurement of discipline, valuation principles, what are the different valuation principles, accounting estimates, what are those, and fundamental accounting assumptions, because we have to assume certain things, and that is what we have in the first chapter. As the name itself suggests, it's nothing but basic basics, it should be basic concepts and principles of accounting. That is the first one. Second, accounting process. So here we start the practical aspect of the syllabus. Bookkeeping, difference between bookkeeping and accounting. Double entry system of the accounting is the most important aspect in the entire syllabus. That is chapter 2, and in chapter 2, this part, that is double entry system of accounting. Debit and credit. What is debit, what is credit? Recording of business transaction, that is nothing but journal entries, ledgers, etc, etc. Then we have, again, they have mentioned the same thing again, journal, subsidiary books like purchase, sales, etc. Then we have cash books, ledgers other than those, and trial balance, rectification of errors. Rectification of errors is also part of this accounting process. Rectification of errors on its own is a huge topic, I would say, but the institute has inserted this along with the accounting process. Fine, I think it's the same with CA Institute as well. They also have done the same. In fact, at this moment I would like to say that this is more or less a replica of what we have for CA Foundation accounting, except for a couple of small chapters which is not there here in CSEET. The rest of the syllabus is more or less a replica of what we have in CA Foundation. They have the same things. For example, the third chapter there too is bank reconciliation statement. So again, this is something which you would have studied in 11th or 12th depending on which state you are from. Meaning causes of difference between bank balance, that is the passbook balance, and balance as bank balance as per the ledger, they mean, and the balance as per the passbook, that is bank statement, etc. Why do we need reconciliation? Very interesting chapter. In fact, one of those chapters which frequently appears in CA Foundation paper. So one thing which you should be aware of is, after a very long time, the institute has brought back fundamentals of accounting, and not only that, they have brought back this subject and they have made the mode of examination descriptive. So the ones who will be writing in June, you have to be thorough with your preparation, because we do not know we do not have a model, or we don't have anything to go by to check what might be asked, what might not be asked. So that is something which you'll have to keep in mind. So you'll have to be thorough, and one good thing is the exam is about 5-6 months away. So that is one advantage. So you can be thorough by then. After bank reconciliation statement, we have depreciation and amortization, which is again a copy of what we have in CS. In fact, CA, sorry. There we have another chapter which is inventory. Thankfully, it is not there here. That's a small chapter, doesn't matter. Depreciation and amortization, again, this is something which you would have studied in 11th, if I'm not mistaken. So depreciation, we know, is nothing but the permanent reduction in the value of asset, and we have that. Let's go through the syllabus here. Meaning and differences between depreciation and amortization. Methods of calculating depreciation. Predominantly, you know the method, straight line method is there, diminishing balance is there. Okay. Then accounting treatment of depreciation for both straight line and diminishing balance. Change in the method of depreciation and its treatment. This will be very interesting, in fact, when an entity changes the method of depreciation from one to another. So this can happen in two different ways, in fact, whether the change is in retrospective or prospective. If it is retrospective, it can be slightly confusing. If it is prospective mode only, then it's not a big deal. So we'll just move ahead. Then we have preparation of final accounts for sole proprietary concern or sole proprietorship. This would be a major chapter, though here it's just one line, but it's a major chapter because this is in fact the culmination of accounting, like where we start with identification, journal entry, ledger, trial balance, and finally we come to final accounts, that is preparation of trading and profit and loss account along with the balance sheet. So then we also have closing and year-end adjustment entries. That means it won't be a simple trading and profit and loss and balance sheet preparation. There will be lots of adjustments, which is fine. Then a very huge chapter that would be partnership and LLP accounts, though we'll be mostly looking at partnership, LLP accounts as such. I don't think there'll be too much of that. Theoretically, it will be there, of course. Meaning and nature of goodwill, huge topic. Factors affecting goodwill, methods of valuation, that is of goodwill, average profit method, super profit method, capitalization methods. Interesting. In fact, this is something which I have taught a few years ago for CS Executive. Same thing. There is methods of valuation of goodwill using average profit, super profit, and capitalization method. It is interesting that now we have the same thing in CSEET as part of accounts. Then we have final accounts of partnership firms, fine, admission of a partner, change in the profit sharing ratio, that is fine. Then retirement is there, death is there, dissolution of a partnership. That means the whole spectrum of partnership is there as part of the syllabus. That is okay. Good. Scoring chapter, I would say. Introduction to company accounts is also there. This is something which was there earlier too. In fact, this too was part of CS Executive. For example, issue of shares, debenture, forfeiture of shares, reissue of forfeited shares, redemption of preference shares, redemption of debentures. All of these topics were part of CS Executive at one point of time. Now this is there as part of CSEET. Interesting. I don't know to what extent the institute will be asking questions. We'll get to know only in June 2026. Accounting for not-profit organization. This again is a huge topic, though don't go by the lines there. It's just 3 lines, but this can take hours and hours for us to understand what it is, especially when it comes to subscription type of adjustments. Receipts and payment account. This is more or less similar to preparation of final accounts for sole trading concern, but just that in this case it is for not-for-profit organizations. Income and expenditure accounts will be there instead of profit and loss account, and the additional thing here is receipts and payments account, which is more or less like your cash book. Difference between receipts and payments account and income and expenditure account, this is theoretical part. Then balance sheet of non-profit organization. So this is what we have as the syllabus. So very fairly exhaustive syllabus, I would say. Not something which you can take it lightly, because if this is the kind of syllabus which they have set, and if this is the mode of examination is descriptive, then you have to be careful with your preparation. As I said, you have enough time, so not an issue. We will be covering each of these topics. So whatever is seen on the screen, everything will be covered as part of the free CSEET course by Ekcel Academy on YouTube. So let's see. Let's get into first lesson, that is basic concepts and principles of accounting. So what do we have here? Key concepts: accounting, bookkeeping, accounting concepts, accounting principles, accounting conventions, what we saw earlier. Let us try to understand what we have. So what I will do today would be to give you a brief idea as to what is accounting. So what is bookkeeping, how is accounting different from bookkeeping, and what are the few basic principles and concepts, and if possible we'll look into other aspects as well depending on the availability of time. So every day these sessions will be for 1.5 to 2 hours, we'll see. So we have gone through the syllabus now. We are in chapter 1 or lesson 1. This is basic concepts and principles of accounting. Learning objectives, let us see, because every lesson will have its own learning objective. Please don't ignore these learning objectives, because sometimes you never know, this will help you in scoring marks in exam as well, because you will know what the institute expects, and if you know what the institute expects, then it will be easy for you to prepare as well. So let's see. They say accounting is a very old concept, as old as money. Of course, yes, ever since money was invented, I would say, we have had a need for accounting. A description of proper keeping of accounts is also found in Arthashastra, they say, written by Kautilya. Of course, we would find it, because anyone who has to govern a society will have to have this type of system somewhere. This is nothing but a system, I would say. However, it has developed with the passage of time to meet the requirements and challenges of ever-growing society. Of course, back then we didn't have cross-border transactions, we didn't have these type of complex income tax laws, etc. Now, modern day laws has necessitated modern day principles, conventions, and accounting standards, IFRS, whatnot, Ind AS, etc. The modern day accounting concept based on double entry system was originated by Luca Pacioli in Italy. What we study, that is the debit and credit aspect, that is what the double entry system. We'll get into the detail later. Though the act of accounting is very old. In recent times, it has acquired special significance because of rapidly growing economy, cutthroat competition, expanding markets, increasing production, and changes in technology. Fine. Of course, all these things are there, so we have to understand all this. Okay. In this lesson, we will throw light on the basic concepts of accounting, types of accounts, accounting principles, conventions, concepts, and standards. Fine. We'll see what are these. Again, there is a huge outline, lesson outline. Let's not get into that because again the same thing is there in detail. Let us get into the detailed part right away. Meaning of accounting. What is accounting? Accounting is often described as the language of business because it communicates financial information in a structured and meaningful way. Of course, yes, there is a structure, and if there is no meaning, then what's the point of communicating anything? So of course it communicates in a meaningful way so that everyone understands, even a layman, hopefully. Every organization, from a small proprietary concern or a shopkeeper, as I say, to a multinational company, MNC, they need to keep track of money coming in and money going out and value of what it owns and owes. So in short, what they are trying to say is, if we do not keep a record of all these things, we will not know where the money is coming from and to where the money is going to, and we will not know to whom do we owe and who owes us. So for that, we'll have to record somewhere. So initially, I'm guessing perhaps when it was started as a method or a function, maybe they recorded haphazardly, randomly, whatnot, we do not know. But now, over a period of time, after getting refined over all these centuries, now we have a refined system of recording accounting transactions. So, and that is what we will be studying. Okay. In essence, accounting involves what? Identifying. That is, we have to spot transactions that have a financial effect. Basically, we say, unless you identify first, you won't be able to proceed towards the next step, which is recording. How? Because there will be several business transactions, or let me put it this way, there will be several transactions in a business, and not every transaction need not be of financial character. There will be some transaction which will not have any change or exchange of money or money's worth, be measured in terms of money or money's worth. Then we finally come to the recording part. So where do we record? Of course, we record in primary books of entry, which is nothing but journal entry. So then the rest of the steps happen. We'll come to that later. That is the ledger posting, trial balance, P&L, blah blah blah. So then the essence of accounting, let's complete this. First we looked at identification, measuring, recording, and lastly communicating. So why do we do all these things? Why will an accountant identify, measure, record? There should be some purpose, right? If there is no purpose, what's the whole point of doing this? The purpose here is very simple. We communicate all these to the interested parties. Those interested parties could be anyone. There are various, there's a huge list of interested parties, I'll come to that later. But let's assume for a second, at least forget the rest, at least the owners of the business will be interested, no? If you have invested some money, let's say some 5 lakhs into some business or 10 lakhs into some business, you would be interested, of course you should be, as to what happened to the 10 lakhs? What are we doing with the 10 lakhs? Are we able to transact with those 10 lakhs of rupees? How much has the entity sold? How much has the entity purchased? To whom does the entity owe? To who all owes to the entity? All these things we'll get to know only when we prepare all these records, and which finally leads up to balance sheet. So that's why communication is important. We have to communicate to the owners, if not anyone else. Of course, there are others also. We'll come to that later. Okay, they have given some example as well. If a clothing store buys fabric for rupees 50,000, okay, sells garments for rupees 80,000 and pays 10,000 in rent, accounting will record each step, calculate the profit and present it in a profit and loss statement. Of course, yes. So they have given a very simple example. Let's say you buy fabric for 50,000. If you buy fabric for 50,000, it's not as if you will sell it for 50,000. Of course, you are there to run the show, run the business. The whole purpose of business is to make sure that you have some margin at least. In this case, he is selling the garment for 80,000. Whatever he bought for 50, he is selling for 80,000. And not just that, when you transact or when you conduct a business, there will always be expenses. There will be few direct expenses, there will be few indirect expenses. Here they have said that there is 10,000 worth of rent. So that means already 10,000 is gone. Whether or not you transact, that rent will be your permanent expenditure. So the whole thing here is what the institute is trying to say with this example is, whatever you do, whatever which can be expressed in terms of money or money's worth, accounting will record. It will record every step. That means wherever you spend money, even if it is single rupee, it will record that. Even if you are getting single rupee, it will record that. And finally, we'll calculate the profit and present it to the owners, saying, okay, this is what you have done. This is the end result, profit, loss, whatever it is. So that is what we see in the essence of accounting. Let's move on. Evolution of accounting as a social science. Not very important, I would say, but let's go through this. Understanding accounting as a social science. Okay, fine. We usually think of subjects like sociology, political science, or economics. Okay, fine. These study human behavior in groups. Of course, yes. Societies and institutions. Surprisingly, accounting also falls into this category, they say, not because accountants or sociologists discuss, but because accounting does certain things. Let's see. So their argument here is that accounting is not just something which deals only with money. It can also be considered as a social science. Fine, these can come as theory questions. We do not know the format of the question paper. All we know is it will be for 100 marks, descriptive. I'll just give you one example of CA Institute, how they, because we do not have any other yardstick for us to compare this, because the syllabus is very similar to CA Foundation. So I'll also compare it with the CA Foundation paper format, where there will be 6 questions. So first question will be compulsory, that is for 20 marks. Every question is for 20 marks, in fact. You have to attempt 5 out of 6, but the first question is compulsory. So in that compulsory question, there will be lots of theory questions as well. So these type of topics may appear there as part of the theory question for 3-4 marks also. So that's why it is very important. See, when it comes to professional courses, you cannot ignore even a single line in study material. For us, it is a study material which matters. Everything else is not important. If you are thorough with the study material, you don't have to worry about anything. But if you ignore certain chapters, if you ignore certain aspects or certain topics of certain chapters, then you are risking your chances of success. So be thorough with the preparation. Just mark as important for theory. That's all. That's more than sufficient for now. Then we will come back to this whenever, when you are revising, you will know, okay, this can come as a theory question. Okay, coming back to the accounting as a social science. What is this? Surprisingly, accounting also falls into this category, they say. Fine, because they say accounting shapes human decisions. Of course, yes. If you are a potential investor, how will you decide whether to invest in a, let's say, company A or company B? We don't have any other information. We do not have inside information, of course. We can only invest based on what is available to us, outsiders, that is the investors, potential investors. So what is available? What is the most, most determining factor when it comes to someone investing? Of course, it will be the profitability, it will be various other things, but profitability will matter, okay? So investors decide whether to invest, governments decide how much tax to collect, and creditors decide whether to lend, all based on accounting reports. Oh my goodness. We have a huge thing here, huge list. In fact, this is what I said as users of accounting information. The ones who require accounting information are, it's not just the owners, but there are others also. For example, investors, potential investors, governments, because you may be projecting that your company has very little turnover. But then they realize that your company has huge double, triple the turnover of what you have recorded and uploaded to the government website. Then the government realizes you are avoiding payment of taxes. So your declaration is far less than the reality. Then the government will come knocking on your doors, asking for you to pay tax, penalty, whatnot. So of course the government is interested. Then creditors, the ones who lend money or the ones who sell goods to you on credit basis. Why would they do that? They should have some kind of guarantee that US is a business which will do fairly decently and which will be able to return the money which you owe to them. So how will they get to know that you are doing fairly decently? They can get to know only by looking at your accounts. Now, otherwise, how will they get to know anything? So they won't know. So that is there. And that's all. Those are few of the organizations or people who will need information, and we shape their decision. That's why they say accounting can also be considered as a social science. Reflect society's economic activities. Of course, yes, we look at GDP, etc. through this. The way we record and report financial transaction depends on the culture, laws, and the economic systems we live in. Fine, but now I would say this is largely untrue because most of us more or less follow the international standards, and most of the countries are converging towards one standard wherein we record and present the information in more or less the same fashion. So that way, especially for MNCs, there won't be any discrepancies when the same is sent elsewhere. Promotes transparency and trust. Of course, just like the rules in a game keep it fair, accounting rules ensure business play fair with money. Yeah, that is there. Okay, key points of accounting. Let's see what it is. It's normative, guided by rules, standards such as IFRS, Ind AS, as I said earlier. So we have certain rules. For example, evaluation of inventory, evaluation of foreign transactions, how do we account for deferred taxation, how do we account for contingent liabilities, whatnot, etc. So we have standards. That means there are already international bodies which have clearly defined as to how do you record certain things, how do you present certain things. There is no ambiguity when it comes to certain things, okay, because the rules are there, because over years, over decades, organizations, entities have realized that there can be some confusion regarding one, accounting, two, presentation. So all these IFRS, Ind AS, they deal in such things. So if there is a new issue tomorrow, there will be new Ind AS, there will be new IFRS. For example, no one would have thought of crypto, for instance. Crypto is something which is a recent invention, fairly recent. So then suddenly we'll have to think, how do we account for crypto, how do we account for crypto gain, etc., etc. So then there will be new Ind AS, IFRS, whatever standard. It's empirical. It is based on actual financial transaction. I keep saying this in classes. As an accountant, you are mostly a recorder of history. We record whatever has already happened based on facts which we are presented with. What are those facts? The facts in this case, or the proofs in this case, would be invoices, documents, vouchers, whatnot, bills. So based on that, we record stuff. We record, okay, this is what we have spent, this is what we have earned, etc., etc. All this is based on whatever has happened. We don't record, we don't predict future, of course. That is not our job. Our job is to record whatever has already happened. It impacts resource allocation in society. Okay, if they say so. Fine. Let's move on. Let me just quickly go and check if there is any question or such. Fine, there is no question as such. You are free to ping me through chat window here. I will occasionally come and check if there is any question, if there is any doubt. If you feel like I'm going too fast, please do stop me as well. So it's a huge syllabus. I want to make sure that it is covered before April, so that you will have sufficient time in the month of May to revise and then appear for the exam in June. Okay, let us see. Historical development of accounting, again not very important. This they have given few data points here. Mesopotamia, okay, they recorded on tablets, okay, tablets, stone tablets, of course. Egypt used papyrus, mostly paper, for recording grain storage and state revenues, fine. India, the Bahi Katta, traditional ledger used in kingdoms, okay. Greece and Rome, public funds and treasury records maintained for accountability, fine. Then Middle Ages, this is where the accounting kind of got modernized. That is by Luca Pacioli, as we saw earlier, in Italian, known as the father of accounting. So he introduced double entry system of accounting in 1494, that is at the end of 15th century. So then we had industrial revolution, increased scale of business, everything increased. Then they realized, okay, we just can't have basic accounting, we need to have cost accounting, managerial reporting, auditing, etc., etc. So all those things came into picture. Then we have 20th century, rise of corporate accounting, auditing standards, stock regulation, stock market regulation. Of course, we have seen lots of scams here. Then we have generally accepted accounting principle, that is GAAP, IFRS, accounting bodies established. Of course, that happened in 20th century. Then we have 21st century now with ERP, AI, blockchain, whatnot. Focus on sustainability, integrated reporting, ESG reporting. We will see all these things much later. Then greater role in governance and social responsibility. Not very important when it comes to the 21st century part here. So what I would say is what happened in 20th century, that is rise of corporate accounting, auditing standards, stock market regulation, and GAAP, IFRS, and accounting bodies. That is the most important thing which has happened. So we have some kind of standard. The rest we have had incremental updates now, not groundbreaking updates as such. Anyway, let us move to the meaning part. So what we did so far from the start of the lesson till now is to understand the background of accounting as a system, like how it was, and over centuries or decades, what it is right now. That is what we have seen so far. Then meaning of accounting, let's see. Accounting is the process of identifying, measuring, recording and communicating financial information to permit informed judgments and decisions by users of information. Okay, there are various definitions. This is one such definitions. Let's see. Let us break down this definition, that way it will be easy for us to understand. What do they say? They say accounting is the process of identifying. So we identify here. What do we identify? As I said earlier, we identify whether the transaction belongs to the business or not. Then we will measure it. How do we measure? We can't measure unless something can be expressed in terms of money or money's worth. Once we are sure of these two, that is after identification whether it belongs to the business or not, and after measuring or after ascertaining that it can be measured in terms of money or money's worth, then only then we'll proceed towards recording. So recording, here we will include everything here, that is recording in the form of journal entry, then posting to the respective ledgers, then transferring it to trial balance, and then from there transferring or preparing P&L and balance sheet, and communicating financial information to permit informed judgments and decisions by users of the information. See, there are other definitions also wherein we say the accounting is nothing but art of recording, identifying, recording, classifying, summarizing and interpreting. So there they have split into different functions. So first we record. There when they say record, they only mean journal entries. Then they say classification. Classification is nothing but transferring the entries from journal to ledger. Then we summarize. Summarization happens by way of trial balance, and finally we interpret the results thereof, that is through all this financial information. Okay, so this is one definition by American Accounting Association. It's okay, there are various definitions. This is one such definition, that's all, it doesn't matter. Okay, so let's move ahead. What else do we have? It is, they say, the art. Oh, 1 second, give me a second. Oh, I got back here. Okay, where were we? Yeah. So, give me a second, let me just drink some water. Okay. Let's see. It involves art. Okay. It involves judgment, skill, and creativity in presenting financial information. Mostly disagree. Since they have said, we'll just say yes. There is no judgment, skill, and creativity in presenting financial information. Of course, to some extent there might be, but this is stretching things a bit more than what it is. Okay. So here mostly, as I said, in accounts we are mostly history keepers based on facts. Okay. Then recording, chronological documentation of financial transactions. This is very important. This is something which we have been doing since day one of accounting. We always record based on date. That is, whatever happens first will be recorded first, and then things pile on top of that based on chronological events. Classifying, systematic arrangement of transactions in ledger. Just now I said that, the same thing is mentioned here. Then we have summarizing, that is preparation of trial balance, interpreting P&L and balance sheets, analyzing the data to aid decision making. Okay, they have put it here this way, fine, doesn't matter. So basically what they're essentially trying to say is these are the functions of accounting. That is, it is an art, it involves recording, classifying, summarizing and interpreting. Definitely true in these instances. Okay, so then what else? Oh my goodness, how do I get rid of this? Yeah, done. Scope of accounting, what do we have? Let me just erase that part. So, recording of transaction. Okay, this is something which I have to point out here. This is of course the repetition of whatever we have seen earlier. So I would say when it comes to studying, be mindful of the fact that there will be certain things which might be repeated, like what we are seeing now. Sometimes I would have explained to you much before the actual text. So in such a circumstance, what I will do is I'll just skip to the next part. So I've already told you what happens in case of recording of transactions. We record in the form of journal entries, so that is what they have mentioned here. Then we have classification, that is we post all the journal entries related to one particular account and sort it there. That is nothing but creation of ledgers. Here they call it classification. And summarization. Summarization in my books is nothing but preparation of trial balance, wherein we have trial balance is what? In fact, it's a statement containing what? Containing all the ledger balances. So that will give us the summary of all the transactions. And we also know that if you already studied accounts, you will know that trial balance will give us the arithmetical accuracy. If the total of debits and credits match in the trial balance, we know, of course, fairly it is correct. Then we have financial reporting. This is something new. Preparing and presenting periodic financial statements, including profit and loss. Okay, here when they say periodic, generally we think that financial statements are prepared once in a year, but that is not always the case, especially when it comes to companies. Companies would need constant information regarding the performance of the company. Every quarter we have financial statements. Of course, if it's a listed company, then there will be far more regulations. So that is something which you have to keep in mind when it comes to reporting. So there is always need for accountants, especially if you will be a company secretary who is well versed with accounts, then added advantage, bonus to you. Anyway, preparing and presenting periodic financial statements, all those statements including cash flow, because generally when we say financial statements, we tend to mention often only the P&L and balance sheet. Of course, cash flow is also part of that, just that we won't study that as part of CSEET. You will study that as part of executive. Compliance with laws and standards. Of course, that is one of the things which we expect accountants to do. So we'll have to make sure that we comply with various laws and standards. Law could be any law enacted by the country. For example, we'll have to follow income tax, we'll have to follow Companies Act, we'll have to follow various other acts, Provident Fund Act, Employee State Insurance Act. At the same time, we'll also have to follow certain standards. So what are these standards? These standards are like, for instance, we have accounting standards, that is Ind AS, we have IFRS, whatnot. So all these standards will also have to be followed. So that is something which we have to keep in mind when we are recording transactions, when we are doing all those things, that is classifying, summarizing, recording, interpreting and whatnot. So whenever we do any of those steps, we will have to make sure that everything is followed, that is law as well as the standards. Finally, they say decision support, okay, supplying accurate and relevant financial data to assist management in planning. Of course, this is one of the important steps of accounting, because any decision making by the management has to be backed up by data. That data, one of the most important data points would be, in my view, accounting data point, like how is the company performing. Of course, there will be other parameters as well. What might the company do in future? Sometimes the valuation will not go by what has happened, it goes by what might happen in future. For example, Flipkart famously has never earned profits, but still its valuation is more or less the same since many years, though it has decreased in the last few years. Anyway, so decision support also requires accounting. Then safeguarding assets, implementing proper record keeping and internal control system, very important. Internal control, this reminds me of again the very old syllabus, 2000, I think when I wrote my intermediate, we had this as part of executive, that is auditing. That is something which the institute has totally removed from the syllabus. Now I don't see auditing as part of the CS syllabus anywhere, whether it's as part of CSEET or executive or professional. So auditing was there as part of the syllabus, and we had internal control as part of one of the topics in auditing. That was of 30 marks and 74 accounts. Anyway, that's a different story. So the point here is safeguarding of assets. If you have proper internal control, that means work done by one person is already automatically checked by someone else. So then you already have a system in place. You don't need some outside party to come and tell you that something is wrong with your institute. So internal control is also there. It should be there ideally. So but accounting will help you set that internal control, set up that internal control. Then facilitating auditing, yeah, Okay, maintaining clear and complete accounting records that enable auditors to verify the accuracy. What will auditors do? Auditors usually check as to what the accountant has done. Like, if accountant has an entry saying that they have spent cash rupees 10,000, they will say, okay, show me the proof for this. You have mentioned that you have spent cash for towards something of rupees 10,000, but how do we know that you have actually spent? It's not like they will ask like this. They will ask him to provide the proof, and he will provide the proof. And if at all there is no proof for certain transaction or transactions, then they will ask as to why there is no proof for this. How do we check the authenticity of these transactions? That is what auditing is all about. I'm just giving you in a very brief manner, of course. So they check the accuracy, they check the true and fairness of the financial statements, etc., etc. That is what auditors do. And of course, it is the accounting which is the base for auditing. Assisting in taxation, of course, yes. You file returns, income tax returns. You'll have to. Once you start earning, you will be filing income tax returns. Then how do you file income tax return? Based on what you earn, right? Your income. Tax is based on income. So the income which you earn will be the basis for you to make the payment of tax. So that is what you do while filing income tax return. For that we need accounting data. So that is also something which accounts does. It assists in taxation. Okay, let's move on. Significance of accounting. What are these significances of accounting? Let's see. Decision making tool for management. We just now saw this, so I won't get into this again. Then ensures accountability to shareholders and society. This is interesting. See, we generally think that accounting or business entity for that matter, only it is answerable to the owners, the management, shareholders, etc. But it isn't the case. Businesses are also answerable to society, because it is through society that the business has come into existence. It's not as if the business stands on its own independently. Whatever the business does, it affects society as well. So it has to be answerable to the society. Okay, let's see. Since shareholders are the real owners of a company, accounting ensures that they are informed. Of course, yes, every year shareholders will get the report as to what the company has done. If it's a listed company, that is what the shareholders will get every year. Ensures that they are informed about how their invested funds are being used. Fine. Transparent financial statements also reassure society that businesses are operating ethically and responsibly. This is very important in this day and age. We see businesses operating unethically, cutting down forests, polluting the lakes, air, whatnot. We have that such high AQI levels now. Why? Because of so many activities. Of course, there are certain businesses which are into malpractices. So that means what? They are not being ethical. So we have to make sure that they follow ethical systems. Of course, it has got very less to do with accounts, but here what they are essentially saying is, if you follow proper accounting, we will also know that you are not routing your funds to somewhere else. It's not as if I'm getting the money through my sales, but I'm using it elsewhere to the upliftment of my personal family. That's all, nothing else. I'm not using the funds for business. So that is something which we'll get to know through accounts, and there have been many scams. The famous one being the Satyam scam, where Ramlingam Raju wrote a letter on his own saying that he had been scamming and whatnot. It's a huge story. Of course, you can ask ChatGPT later on as to what it is. Interesting story, something which everyone should know, especially as a student of company secretary course. Anyway, here they have mentioned few things: annual reports, disclose profits, dividends, CSR activities. Of course, this is something which the 2013 Companies Act brought into picture. Corporate social responsibility, of course, and compliance with laws, allowing shareholders to assess management's performance. So all these things will help us. Help us, the shareholder, to assess whether the company is using whatever invested funds the company has properly. Then compliance with laws and regulations. Fine. This is something which we have to make sure. Here the government will also be interested. It's not just the shareholder, because the government wants to know whether the business is actually following laws and regulations. Because every business has to comply with several laws. If you set up a company, then you will know that there are so many things which you have to follow. That's why sometimes businesses also say that the ease of business is not so present in our country, but of course it's a topic for another day. But what we have to understand is, if you are setting up a business in India, you'll have to follow the laws which are there already in India, because you already know that these are certain laws which are there, which are in place already. So you'll have to make sure that you follow those laws. Predominantly, if you are a company, then Companies Act will be there, and if you are a listed company, then SEBI listing rules will be there, and income tax anyway will apply to you as long as you earn money. So how is accounting coming into picture here? Accounting will ensure that proper records are maintained by recording transactions periodically, chronologically, and following all the standards set by IFRS, Ind AS, and whatnot. So they make sure that the reports are filed on time, etc., etc. For example, one example which I can think of the top of my head is payment of provident fund. So how does it work? The company will contribute, and the employee will also contribute. The company will match, in fact, the contribution of the employee, and the company will have to make sure that the same is paid to the PF department. If it is not paid, just by looking at the books, I will get to know, okay, you have collected the PF from your employee, you have set aside some money matching your employee's contribution, but where have you made the payment? You have not made the payment at all. This is still outstanding in your books of accounts. So that is something which will easily get to know through accounts. So that means there is one example here where we can readily see that through accounting, I'm getting to know whether the compliance of law has been made or not. So that is there, and you can think of various hundreds of such examples. GST, for instance, if the GST has not been paid, if you have collected GST and if you have not paid to the government, then it's your liability. No, you have collected GST, but the GST is not yours to keep. It is in fact the government's. You are only a conduit for that GST amount to reach the government. So you have to make sure that it is passed on to the government. Then facilitates taxation and government planning. Of course, this is also there. The government will plan every year. The finance minister will present the budget through Finance Act. So they also have to have an idea as to what might be the tax revenue which we will get, how much we will get through GST, how much we will get through income tax. So they also rely on all these reports, and they will make an estimate as to what might be their revenue, etc. So for that also they rely on all the individual companies' accounting records. Of course, they look at the collective picture, but for that collective picture to be available, we need the records of individual companies. So that way it is very important. Performance evaluation of a business. That is again interesting. We evaluate the performances. That is something which we always do individually as well as with the businesses. Like, how did we perform last year? How are we performing this year? Are we better? If not better, where are we losing out? How is our efficiency, profitability, and financial health, etc., etc. All those things I mentioned here. Fine. Example: a hotel chain can use accounting reports or reports to compare occupancy rates and profits of different branches, identifying which locations are performing best. Of course, yes. If you have multiple hotels, or if you are part of a hotel chain, then you can easily do all these things. Of course, there are so many things which you can do. So you can, in fact, measure. If you have multiple branches, you can measure like which branch is doing good. Even if it is in the same city, maybe sometimes one branch is doing better. But how will we know that branch is doing better? We will know only if we have the records. No, otherwise how will we get to know? We won't get to know. Okay. Then historical record for future references. This is what I have been saying since that time, that as accountants we are history keepers. We record stuff so that if tomorrow someone wants to know what exactly has happened in the company in the last 1 year, they can easily go through the accounts and get to know. They don't have to do anything else. Just by following money, you will get to know hundreds of things. I'm sure you would have heard of this in many movies also. Follow the money and you will get to know what exactly is happening, because money trail can't be easily erased. That is something which we all know. Anyway, accounting creates a permanent record of all business transactions, which is useful for audits, resolving disputes, etc. Of course, yes, if there is a dispute between two, let's say there has been lots of disputes in Indian context also, the famous one being the Ambani brothers dispute. So when Dhirubhai Ambani died, he died relatively young, suddenly, at the age of 65, 70, I guess. So then there was, after some time, quarrel between Mukesh the elder and the younger brother Anil Ambani. So then they decided to split the company based on all this financial information. So that is something which we need even in such circumstances. Okay, so in such circumstances, what did they do? They relied on the past data, like this particular branch of Reliance was earning so much, I will take this branch is earning so much, okay, you take that, etc., etc., etc. That is what happened in case of Reliance, and there are many examples also. So it's just one example which occurred to me right now. So let us look at the next part, which is the objectives of accounting. What are these objectives? Again, there is some repetition here too. Let's see what it is. Recording of transactions. Of course, yes, the most important objective. We record transactions. We will not go in detail there. We have already seen what those recording is, journal, ledger, etc. Determining profit or loss, calculating business results over a specific period. Of course, after recording, we want to know whether the company has earned profits or incurred losses. That's fine. Determining financial position. This is regarding balance sheet, like who owes us, to whom do we owe, what are our assets, what are our liabilities, what is the capital, etc., etc. Share capital if it's a company. Providing information to the users. As we saw, users need not be only management of the company. Users could be anyone, including government, including society at large, creditors, there will be investors. Okay, so we need to provide information to them. So that is also one of the objectives of accounting. Again, this can come as a 5 marks question. They might ask you to state the objectives of accounting and explain briefly. So in such a circumstance, you do this. That's all. In such a circumstance, I'm sure you will get 5 out of 5. All you have to do is just mention. You don't have to explain. They have very clearly asked, what are the objectives of accounting? State briefly. So then you will write as it is, as it can be seen on screen. And this is not something which you will have to by heart as such. This is purely based on logic. Compliance with the laws. Of course, we have to make sure that that is one of the objectives, to make sure that the company complies with, not just the company, any entity, business entity for that matter, is complying with various acts which are applicable to it. For example, if it's a company, then Companies Act will be applicable, and if it's a listed company, then SEBI rules will be applicable, and of course then if you are earning, tax laws obviously will be applicable, whether it is income tax or GST and whatnot. So you have to make sure that those laws are complied with. So how? That is one of the objectives of accounting. Assets in decision making. Again, we are repeating ourselves here. Then safeguarding assets. So you will know if there is a proper record of all the assets. You will always know that, okay, these assets are with us because it's there. I can see it in the books of accounts. I can see it in the balance sheet as part of the asset. Otherwise, auditors will of course check that too. In fact, in case of Satyam, the same thing happened. In Satyam's balance sheet, there are lots of fixed deposits, FDs. But ultimately, when the auditors actually checked after the scam came out, they realized that there are no FDs at all. Those are fake FD receipts and there are no real FDs. So that is something which they didn't account for. So, and that's how they got to know about all those things. That's why I suggest you please have a look at that once, so you will get an idea as to what exactly happened in that particular case. Okay, then bookkeeping. Meaning of bookkeeping. Okay, here this is something which we have to understand. What we are trying to understand here through this table is, how is bookkeeping different from accounting? Because accounting is the whole system as such, and bookkeeping is one important part of that system. Let's see. Bookkeeping is the process of recording daily financial transactions systematically in the books of accounts. For example, primary books of accounts, which is that journals. So that is what we do here in case of bookkeeping. Let us go through each of those: scope, objective, nature, decision making, stages, and skills required. In case of bookkeeping, the scope is very limited. What do? We record stuff. What type of stuff? We record journal entries. That's it. That's all. We don't do anything else. We record if something has been spent, we'll record that it has been spent, then nothing else. But in accounting, we don't just stop. In fact, where bookkeeping ends, accounting starts. So we not just record, we classify it, post it to ledgers, then summarize, trial balance, then we interpret P&L, balance sheet, cash flow, whatnot. Then when it comes to objective, bookkeeping's objective, as they say, is only maintain accurate records. So whatever you are recording, let it be accurate, let it be based on facts, let it not be some fanciful thing. Then in accounting, we provide meaningful financial information. Again, this is stretching things a bit, but still we'll say we'll provide meaningful financial information, because we are not just maintaining accurate records, we are also communicating that. No, that part is not there as part of bookkeeping, but it's there as part of accounting. Then nature. Bookkeeping, you do the same stuff every day, because for example, if you are a cashier or if you are part of sales team, you record sales, that's all. Same thing is happening every day, you record the same thing, because we need someone to do that. Whereas in case of accounting, it's not just recording, it can be something else also. It can be analytical in nature, it can be interpretive. Sometimes we'll have to understand, okay, this is a peculiar situation which our company is in right now. Should we follow accounting standard 11? Should we follow accounting standard 22? Whatever is that, then you'll have to think, okay, which there is some kind of conflict between the accounting standard and the Companies Act. So how do we deal with that? That is something which an accountant does, something which a bookkeeper will not do, because his work is mostly like the horse in a race, where you just move ahead, that's all. You don't worry about what's happening around you. again, the repetition. In case of bookkeeping, there is no question of decision making, whereas in case of accounting, there will be some decision making, meaning accounting will help in decision making. That's what we are trying to arrive at. Bookkeeping is the first stage. Accounting includes everything, including bookkeeping. There are other stages as well. Bookkeeping is just important part, a small part. Skills required, basic knowledge is fine for bookkeeping, whereas in case of accounting, you need professional judgment, analytical skills. All those things are